Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, February 3rd, 2010. We begin by taking a look at the euro-dollar pair, and as we can see, the dollar gained against the euro after the euro's rally earlier in the session that we see here as we reached 1.4025, fizzled out. The gains here overnight came as Greece did come to an agreement with the European Union on what to do about closing its budget hole. However, as we got into the New York session, investors turned to positive fundamental data, including a good jobs report from ADP, as well as ISM Services Index, which showed the services sector growing in January. Those two reports continue the theme that the U.S. recovery is gaining traction, and so the fundamentals here are boosting the greenback. Earlier, we did see investors react positively to the European Commission's acceptance of the Greek plan, and we saw the spreads between the yields on the 10-year Greek and German government bonds shrink. However, now investors are eyeing Portugal as the next weak link in the European Union. However, we did have Greece's largest union also today say that it would hold a general strike on February 24th in response to the proposed government cuts. And so that sort of undercut some of the credibility for the plan, which also could have had something to do with the euro sliding sharply in New York trading. So as we can see, we moved below our 50-period moving average. We had stalled around this 1.3950 level, but our low here as of 12 a.m. Eastern was just at the 1.39 level. In a look at that ADP report, we see that we had a forecast that private sector firms were going to cut 36,000 jobs in January, but the figure came in better than expected, showing only 22,000 jobs lost. Also, we had the December figure revised to show a smaller than originally reported number of jobs lost as well. The services sector had a second straight month of job gains, but it was, as we see here, 38,000. But it was unable to make up for the 60,000 lost jobs in the goods producing sector. If we take a look at the chart on the right, we are seeing that the U.S. labor market continues to improve, and though we had one positive month of non-farm payroll jobs growth in November, a very small one as you can tell from the chart, expectations are that Friday's report this week will show positive job growth for January. The second report that I mentioned was the ISM Non-Manufacturing Index for the month of January, which did show the sector expanding as the index came in above the 50 level, separating contraction and expansion. It registered a 50.5 reading, though that was lower than the forecast. It is a rebound from the contractionary level we had in December. Business activity had a 52.2 reading, and new orders increased, so that's a good sign for future manufacturing production. However, the employment index continues to be mired in contractionary territory. However, as we did see from the ADP employment change, the services sector, at least from the private sector, is gaining jobs. So we may be seeing a bit of a lagging influence from the ISM index. In a look at the pound-dollar pair, we see somewhat of a similar story to what we had with the euro-dollar, in that we rallied overnight, hitting a high just below 1.6070. But in the wake of a weaker than expected UK services report, we did see the pound give up those gains and in New York session fall below its 50-period moving average, below here this 1.5950 area, following the better than expected US releases. We now test support from yesterday's session. Zooming this pair out a bit, we see that today's high around 1.6070 came very close to testing our low that we had from the end of 2 weeks ago and at the start of last week's trading. So as you can see here, a level of support has now turned to a level of resistance. So that'll be an important level to watch going forward. In a comparison of the euro against the pound, if we put those two against each other, we see that for the most part we had a move in favor of the euro in overnight trading, though those gains were paired in the New York session, and we're mired in a bit of a sideways trading action to start the week. We have a very clear resistance level now at 0.8770 and clear support here around 0.8708. So this is a pretty tight 60 pip range, but we did see the euro gain overnight as a result probably of the Greek proposal being accepted by the European Commission. Let's take a quick look at the fundamentals that we did get from the Europe and the UK. First, in the Eurozone, we saw retail sales flat in the month of December, which disappointed forecasts, which had called for a 0.4% reading. November's sales were revised higher as they had originally been reported showing a 1.2% decline. This was revised higher to show only a 0.5% drop. In the UK, meanwhile, the services PMI, which had been forecast to be at the 56.6 level, which would have been very close to its December level, we came in lower than expected there, as the PMI came in at 54.4. So that may have pressured the Greenback slightly. However, in a positive report which came out in the beginning of today's global session, the nationwide consumer confidence for the month of January rose to 73, showing that UK consumers, their moods is improving. Let's stick with the fundamentals right now, and this time take a look at Australia, where the trade balance for the month of December showed the deficit widening to its highest level in nearly 2 years. Imports jumped 6%, and the trade balance in goods and services grew to a seasonally adjusted 2.25 billion Australian dollars. Taking a look at the Aussie-US dollar pair, yesterday we had some exciting price action following the surprise RBA decision, where the Aussie slid sharply but did find some support here around 0.8780. We established that this level here was going to be a level of resistance, and following a rally in New York trading and during tonight's Asian session, we did test the border of that resistance zone just at the 89 level, and following that test the rally stalled and we saw a reversal and the greenback gained throughout New York session. So price action is showing us that we are staying within our trading range from the last two sessions. So this is now becoming a period of consolidation following a slide in this pair throughout the middle to end of January. In a final look at a currency pair, here we're looking at the dollar-yen. We tested the 90 level, and from there we saw a very strong rally in favor of the dollar, especially as we picked up steam following the better than expected US jobs report from today. We broke above our resistance here around the 90 level, and so this is the highest we've been since January 21st. So the positive U.S. economic data supports a growing economic recovery in the U.S., and so the fundamentals here are driving the dollar higher. That would put the yen back to its normal role, which is being a funding currency for carry trade. That'll do it for today's data and market highlights. So let's take a look at what we can expect in the coming trading session. Tonight, in the New York afternoon at 4:45 p.m., New Zealand will post its employment change for the fourth quarter. That is followed by 7:30 p.m. with Australian retail sales and building permits, and that will be followed by Australia's NZB quarterly business outlook. In the European session, we get data from Switzerland on its trade balance. We get the UK Halifax Bank of Scotland house price index, as well as the German factory orders. However, our important releases come in the early New York morning. At 7 a.m., the UK, the Bank of England, will be deciding on its interest rates, and traders will be very eager to see what the bank decides about its quantitative easing policy. That will be followed by the ECB interest rate decision. U.S. releases include jobless claims, labor productivity and costs, preliminary figures for the fourth quarter, as well as factory orders. From Canada, we get data on building permits, as well as the IV PMI, a measure of overall business conditions in Canada. So that will wrap up today's daily market recap. For more news, videos, and analysis, please visit our site, FXTimes.com. I want to thank you for watching and wish you good trading.